Jon Sabes, you say that 88% of life insurance policies don't end up being claimed. Why are life settlements a better option for aging seniors?
Greg, according to Milliman, who's done research in this area, 88% of all universal life insurance don't result in the payment of a benefit. So if consumers were aware that there was a secondary market, that there was value for these life insurance policies, far and above the cash surrender value, they would much rather turn to the secondary market for the value inside these policies.
Can you explain the mechanics of a life settlement deal? Because it's confusing and counterintuitive to a lot of people. For example, who would be the prime beneficiary?
Sure. We're basically looking for consumers 75 years or older who have owned a life insurance policy for a number of years. They no longer want, can afford, don't need the coverage. And so the basic transaction is that a financial buyer, such as GWG, will purchase the benefit or a portion of the benefit. Lots of times the insured can keep a portion of their benefit and will pay all the premiums going forward. It's a simple transaction, much easier than, say, a reverse mortgage.
Okay, so how does this help people in estate planning? Because lately we've been hearing a lot about using insurance as part of your estate planning.
Great question. Life insurance is a fundamental piece of estate planning, but with the tax changes that have increased the individual deduction, many of the policies that were put in place to provide for estate planning are no longer needed, and that coverage is very expensive, and seniors are looking for options to do with these policies today.
All right, so GWG is out buying these policies. Talk about how you make money.
Great question. Yes, we're out there buying these policies in the secondary market. We make money through a simple arbitrage. We buy the life insurance policy, we continue to pay the premiums, and ultimately we're going to collect the policy benefit. And we're looking for a spread, the difference between what we buy the policy for, the premiums we pay in, and the benefit we receive. It's a simple business.
All right, it's simple business. Still, it scares a lot of people who are used to just paying those life insurance premiums. So talk about regulation, because there's a lot of elder abuse out there, and a lot of elderly people are getting ripped off from a lot of unscrupulous salesmen.
Great question again. Our business is one of the most highly regulated senior financial transactions in the United States of America. According to the National Insurance Association, there have been 5 consumer complaints in the last 4 years. Now, think about that in terms of overall senior financial transactions. There's very few industries that can compare to the complaints that have been experienced in our industry compared to annuities or other businesses.
All right, well, thanks a lot, Jon Sabes, for talking about it.
Greg, pleasure. Thanks for having me.
Thank you for watching The Street.